The peso falls to 50 to a dollar for the first time since 2008 after the U.S. Fed's minutes make the case for a December hike. Local equities are treading water as it approaches oversold levels. President Duterte says he will open up the telco and energy sectors to new players and promises to expedite taking out the regulatory hurdles for foreign entry. Central Bank Governor Armando Tetanco will not commit to a third term for now. He warns against the risks of retreating from multilateralism. And Century Properties partners up with Japan's Mitsubishi Corporation to build 4,000 homes in Cavite. Good afternoon, I'm Sean Yao, and you are now in the loop. And those Fed minutes pretty much cementing a December Fed hike. Fed futures now calling it a 100% sure thing. The PSE also finally staging a rebound on this Thursday session, but the peso breached 50 pesos to a dollar earlier as the greenback continued its surge. 50 to a dollar sooner than we thought. JP, expound, please. What happened?
Well, it doesn't get any uglier than this, Sean, as the inevitable has happened. The peso has touched that 50 to a dollar level, as you mentioned, weaker than what analysts at ING, RCBC, and Nomura previously called, with neither of the firms seeing the local currency going past 49.50 by the end of the year. But there you have it, the peso hitting that dreaded mark, drawing a new resistance level of 50.17 near term, with 1 month forwards also seeing more room to slump. But don't take it too personally, guys. No one in the emerging market space is having a good day today. And you can blame it all on the Fed again. After the release of the minutes of the Fed's recent policy meeting last November, had Janet Yellen and company agreeing that the labor market in the U.S. is strong enough to handle an imminent rate hike. And apart from voicing some concern that long-term yields may rise and higher than expected inflation, the conditions are ripe for a rate hike in December, with the odds now, as you mentioned, at 100%. And according to Fed fund futures markets. And currencies, as you can see here, from Mexico to Malaysia, commiserating with the peso, and really we're probably going to see these Latin American markets also sag when their markets open later on tonight. Now, how this all blows back into the PSE is really anyone's guess, as the main index is on shaky ground, seeing a meager 3-point rise at the break, as the PSE's recent tribulations have many wondering if the bourse has bottomed out and if it's the right time for some fools to rush in, but not so fast, guys. According to BPI's chief investment officer, Smith Chua, who told Bloomberg that the PSE's recent slump is not a trigger to buy. This despite highlighting that the premium of the main index's price-to-earnings ratio to the rest of Asia is now at its lowest since 2012. That's one way of looking at it. Another is that the PSE here in the white, with their forward PE ratio at at about 16.06 actually, still has a long way to go with a 9.5% premium versus the MSCI Asia Pacific Index's valuation. And more expensive than neighboring markets such as the Jakarta Composite and the Thai SET. Both suffering bigger foreign fund outflows than the PSE actually, but both seeing less downward pressure than the local bourse here. In fact, Smith Chua also raised that the market uncertainty is a bit more complex, aside from the impending rate hike and the implications of a possibly more protectionist Trump presidency's potential effect on our local BPO sector. There's a lot of P's, sorry guys. Many investors are also starting to get fidgety on delays in President Duterte's infrastructure push and in passing the tax reforms that are a highlight of his economic platform. So the PSE, it seems to be caught in a little bit of limbo today, but the peso sailing further and further downstream. Sean, back up to you.
Thanks, JP. Meanwhile, President Duterte is back from the APEC summit in Peru, a forum where world leaders vowed to fight all forms of protectionism. Likely inspired by what he heard, the outspoken president now wants to open up the energy and telco sectors to new players.
The only way to make this country move faster to benefit the poor is really to open up communications, the airwaves, and the entire energy sector. My decision now is, this moment is, bubuksan ko ang Pilipinas. Or else you can count by your fingers about in one hand, the power players of this country. I do not want to have a quarrel with the Ayalas and Pangilinan. I am not trying to destroy you. You have the advantage, you are here already. Be content with that. Okay na yan para sa inyo. But let us open everything.
Ayala, of course, pertains to Ayala Corporation, which controls Globe Telecom, as well as a few power ventures, while Pangilinan is Manny V. Pangilinan, chair of PLDT and Meralco. Duterte went on to say that the government has begun looking into regulatory requirements to hasten the entry of new players. But the Philippines Constitution imposes strict limits on foreign capital, including in energy, telco, and communications. At most, foreigners can only own up to 40% of local ventures in such sensitive industries. The president also spoke of the ongoing controversy over the Marcos burial. He insisted that it was not part of a larger plan to bring the Marcos family back to power.
I am not doing anything to put the Marcoses back. I never said it, and I will not. Yung election, sabi ko, baka maparid. But after election time, to all the protest organizations, let me throw this simple proposition to you. I will gladly and happy even to step down and relinquish my post if you can answer in the negative these two key questions. Was the late Ferdinand Marcos a president? And was he a soldier? Never mind about a hero. It's hard to document something like that. To document heroism requires history. Hindi madali yan.
Protests against the burial are being organized for tomorrow, and Duterte says they can do so as long as they want and even without permits. And by now, no briefing seems complete without the president lashing out at the United States. He went on a long rant after a foreign journalist asked about extrajudicial killings again and ended up suggesting that the U.S. allowing same-sex marriage means the country's lost its way.
They have groups there. The LGBT, they go to State Department guys, they go to Liberia and offer aid and assistance. But, they said, come out with the law that would allow same-sex marriages. What's happening? What are the principles that the builders of America they have lost along the way?
President Duterte vowed to abolish the Energy Regulatory Commission if its officers refuse to resign. He called for their heads 2 days ago after getting reports of rampant corruption inside the agency. The Senate has begun looking into the issue, which was triggered by the death of Francisco Villa Jr. Michelle Orosa Ople has more.
Senate Energy Committee Chairman Sherwin Gatchalian says an investigation of alleged corruption at the Energy Regulatory Commission could begin next month. This as President Rodrigo Duterte has threatened to abolish the independent regulatory body. Gatchalian adds the matter is urgent given the implications for the power sector.
As soon as the Senate opens its session, I think i-refer niyan to the appropriate committee and we will calendar it right away. Siguro 2 weeks from now.
Gatchalian says the Senate has not received any instructions from Duterte.
We're just taking cue from the President's statements, because he categorically mentioned that he is calling on Congress, as well as the Senate, for that matter, to look at this issue, and to look at this problem, and maybe suggest to him and to the administration what is the best action, the best course of action in terms of maintaining stability and integrity.
The senator adds he is not in favor of Duterte's demand that all ERC officials resign, noting the Commission's vital role in approving power supply contracts and regulating power rates.
It's not practical for the entire Commission to resign or to be dismissed. But what is very important is to really find out the truth and to assure the public that the ERC is being governed with the highest level of honesty, and the consumer and interest is at the foremost of its mandate.
The death of ERC Director June Villa prompted Duterte to propose the agency's abolition. In a new statement, ERC Chairman Jose Vicente Salazar says some parties want to worsen the issue. Villa claimed he was being forced to approve contracts that did not undergo proper bidding. Salazar says that while Villa was chief of the bidding committee, he was never involved in ERC reviews for power supply deals. Salazar has now instructed ERC officials to restrain themselves from defending their reputations. In the wake of expanded allegations following Villa's death, he says this task is better left to third-party investigators. Michelle Orosa Ople, Bloomberg TV, Philippines.
The ERC still wants to talk with the president, even if he repeatedly asks its officials to pack their bags and leave. Salazar stressed that the agency has implemented 3 programs to bring down power costs. This includes a competitive selection process on supply providers, retail competition open access, which would allow the purchase of energy direct from suppliers and not just from existing retail distributors. Lastly, the agency has started cleaning up its own backyard. In fact, Salazar says that those who could not bear the agency's reforms have left. The agency, though, admits to hiring contractual employees. Salazar explains the ERC's 249 regular employees are not enough to monitor around 227,000 entities that it's regulating. NBSP Governor Armando Tetanco says that the Philippines is well positioned to deal with global risks. That includes a Fed rate hike and a second round of Brexit effect. But what poses a major threat to the country is a pullback from multilateralism, especially if the U.S. under Donald Trump revises its policies on immigration and business outsourcing.
It will most likely be challenging, of course, given what's happening abroad. The biggest threat, I think, is really the retreat from multilateralism, because that can affect economic performance in the medium to long term, and there can be a fundamental impact on how the global economy will perform.
When asked about President Duterte's offer for a 3rd term, the Bangko Sentral governor says he's honored. But he does not want to commit to a decision yet until Congress has amended the law limiting the post to 2 6-year terms.
Let's cross the bridge when we get there. Whoever is appointed as next governor, he will have the support of a committed, competent team that's in the BSP and all our people in the BSP. I can say that for all our people in the BSP.
When In the Loop returns, we'll be talking to COL Financial's April Lee Tan as the local market struggles to recover. You're back in the loop on Bloomberg TV Philippines. Now, in the midst of uncertain foreign policies across the globe, how can companies over here stay globally competitive? Well, the ASEAN Regional Forum happening today is focused on just that. Let's head out now to Quintin Pastrana live at the Conrad for what's happening over there. Quintin, what's the latest?
Hi, Sean. Well, we've had two interesting panels in terms of looking at domestic growth helping foreign policy and at the same time economic cooperation in the South China Sea or West Philippine Sea. People talking more about economics and trade relations in terms of getting cohesion in ASEAN, especially as it gets to its 50th year. But the key players here in this forum are the private sector. And we have with us none other than the Senior Vice President of Megaworld, who's at the forefront of this development and expansion of Megaworld. Jericho, good to have you with us.
Good afternoon, Quintin.
Well, look, I mean, one of the things we're looking at is basically, you coming out from third quarter growth of 11%. Tell us about the drivers you have going forward in light of the uncertainties with the Trump-elect presidency and at the same time some regional tensions at home.
Okay, Quintin, I think we've made it very clear that from a builder to a landlord. No? So our emphasis really right now is to strengthen our recurring income base while maintaining already this high base in terms of residential sales. So in our minds, there's a lot of opportunities here that continues to draw a lot of growth prospects, especially on BPO, office development. And with office development also comes this captive market for our retail. So we believe that this will continue to blossom in the coming years. And we will definitely capture that because we have the raw materials, which is our land bank all over the Philippines.
Now, Jericho, you're building on a land base, and one of the key locators here at the BPO sector. Are you concerned at all that any pronouncements from the Trump administration may lower that uptake rate from BPO locators or anything?
We're not concerned because I believe that President-elect Trump already mentioned that a lot of sectors, and I think these sectors are the jobs you were referring to, was the manufacturing side, innovation. So on the BPO, on the service side, I think this is not immediately in their radar. So we will continue to put our bet and we will continue to grow our business on the office side, catering to the BPO.
Now, Jericho, you're an internationalizing company. You're also international growth within ASEAN. Now that ASEAN is on its 50th anniversary, there's an economic community roadmap. Tell us about your plans for the region, or are you focusing in the Philippines alone?
At the moment, I think it is very wise for us to focus on the Philippines. We now have 21 townships all over the Philippines, so Luzon, Visayas, and Mindanao. And I think it is important that when you have the raw materials, which is the land bank, that you continue to take advantage of that. Please keep in mind, Quintin, that Indian companies, ASEAN companies are now coming into the Philippines, whether it's IT, BP, or manufacturing. So really the opportunities are in our country. So when you have the opportunity, you have the financial resources, you have the land bank, then you are in the best position to take advantage of growth in the region.
Jericho, finally, I mean, one of the strategies for internationalizing firms is diversification of business lines. You talk about the rental income and the sales income. Talk about other brands you're bringing in the market and how you're diversifying your business to shore up your bottom line as well.
Are you referring to the other businesses?
Yes, other businesses. I note that, for example, the Savoy Hotel brand is coming in. Tell us about those plans as a hedge for any risk and uncertainties.
In the case of our hotel business, again, this is part of the recurring income side. We can definitely say that we have Savoy, we have Belmont, and of course the local brand, which is Richmond. So our plan is in the next couple of years, up to 2020, we should already have 5,000 to 6,000 hotel rooms in Resorts World Manila alone. And for our other projects, including Jerry or Global Estates Resorts Inc., we're talking about Cebu, Boracay. That's going to add another 5,000 plus hotel rooms. So in total, that's roughly around 11,000. And that will make us the biggest hotel developer in the Philippines by 2020.
Yeah, just as a follow-up to that before we end, talking about those rebalancing moves of the president going to Japan and China, are you expecting that to also boost your growth in terms of tourists and tourist arrivals?
Definitely. I think right now, in terms of tourist arrivals, we are definitely far behind compared to Thailand, Malaysia, Singapore. And this is the appropriate time for us to pick up, considering that the President made it very clear that he will invest heavily in infrastructure. Talk about airports, roads, mass transit systems. So we should be able to capitalize on all of those opportunities. So I think that's where the opportunities are.
All right, Jericho, you talk about signposts, and you're also making a bet on the Philippines, more even than the region. Thank you very much for your time, and wish you all the best at Mega World. All right, Sean, back to you. This is a great forum in terms of the topic. We have more to come. I'll keep you posted.
All right, thanks, Quintin, and we are missing you over here.
And here are the top corporate news. Century Properties signed a new joint venture agreement with Mitsubishi Corporation. The deal is to build 4,000 houses on a 26-hectare land plot in Tanza, Cavite, and to target first-time home buyers. The two firms are also working together to build the world's first Forbes Media Tower in Makati. MegaWorld's San Moritz development in McKinley West is getting a second tower. The 9-story structure will have 32 suites composed of 2 to 4 bedroom units. Prices of units in the San Moritz are up 21% from 2014, with each square meter valued at 230,000 pesos. The tower is ready for turnover by 2019. And SM Investments has set the interest rate for its proposed bond sale to next month. According to BDO Capital, the yield will be 5.159% for the 15 billion peso tranche. There's also a 5 billion peso allowance if the demand is strong. SM will use the proceeds to refinance debt and to fund future acquisitions and investments.
And the Fed will most likely hike rates this December. Here at home, Security Bank says that this could push local interest rates higher. The lender's executive vice president and treasurer, Raul Pedro, talked to Christina Lazo on likely scenarios.
Local inflation, while for most part of this year is probably averaging slightly below 2, for next year, most economic forecasters are seeing it closer to 3 or even slightly above 3, and not even factoring in yet the expected fuel price hike with all the excise tax on fuel. So you could imagine on its own, local interest rates should move up next year as inflation is expected to be around 3. Factor in the faster US rate hikes, then potentially you may see it much higher. Given the amount of excess liquidity in the system, for most part since June, rates have been trading around between 2.5 to 3. What we've seen in the past couple of months, the central bank has started raising the volume on the TDF auctions, and as a result, reducing the excess liquidity in the system. As a matter of perspective, back in July, when the IRC was implemented, that 28-day TDF was only around 2.5. So we've gone up 30 basis points since then, and the BSP has continually announced that they would further increase the volume. So we should trade closer to policy, 3, soon. And when the US rates eventually move up, expect that strategically perhaps the BSP would sort of adjust as well, may see an adjustment higher on the policy rate. Perhaps not necessarily mirroring the Fed rate hikes one for one, but somehow go in a similar direction at the very least.
The peso has been flirting with a 50 to the dollar level. Where do you see it headed by next year and by year end? By
year end, we think the peso should strengthen just a bit. Admittedly, over the past couple of weeks, the movement has been rather drastic, simply because, one, the Trump win boosted the chances of further rate hikes in the US, and that pushed some companies to reduce their dollar exposure and, to a certain extent, bought ahead of their actual requirement. But after that, perhaps over the first quarter or so, you may see a slightly stable or stronger peso by just a bit. But then as the US rate hikes kick in and as policies become clearer, we may see the peso weakening again. 50, that could easily be breached later next year to a level that is, just looking back, 2009, I believe the previous high was slightly above 50, 50.19. Beyond that, it's 51.
The Philippine government has plans to raise funds overseas as early as December for their funding requirements for the following year. Do you think the government should wait for markets to stabilize and issue dollar-denominated bonds for next year?
Ideally, you'd want to hit it when the rates are low. But given the uncertainty in the market, given that the Trump policies and theme is still being formulated, there is a lot of uncertainty. It is difficult to come into a market where there is a lot of uncertainty. There's a risk that you will be priced really high. So in as much as you want to do it because rates are low, probably you shouldn't do it at this point. It would be best to wait it out until markets have somewhat stabilized, when there's more clarity in the economic direction that the new team will be putting on.
Security Bank Treasurer Raul Pedro is also the president of the Money Market Association of the Philippines. The group recently applied with the SEC to form a self-regulatory organization, or SRO. Pedro says the intention is to launch a hedging product for banks and not to compete with the PSE or the Philippine Dealing Exchange.
Knowing that we don't have any other SRO to use, we looked at the rules, we sought advice even from the SEC, and we realized that we are in a position to apply and become an SRO simply for that product, the overnight index swap. So the objective is get that instrument up and running for us banks to trade amongst each other, and in effect allow us to hedge our interest rate exposure across.
When In the Loop returns, we are keeping an eye on property stocks as the market opens for the afternoon session. Stay with us. You're back at the Loop, and we're just minutes away from the market open. But first, let's take a look at a few stocks. JP, let's start off with you since it's just you and me.
Oh, well, I'm not changing my tune today, Sean. This morning, I did pick Ayala Land, and I'm still sticking with them. It's not the best of beats for them. It's only up about 40 centavos, but given the downturn that they've seen over the last few weeks, along with the rest of the property sector, to be honest, it's a pickup that we'll probably take and also look at Ayala Land. Now, the thing about Ayala Land, too, is, and this is something that, as I mentioned, Marvin Herbo pointed out for us yesterday on Starting It also, is if you look at how Ayala Land's traded also, the real reason why we want to look at Ayala Land is that it's pretty cheap at the moment also. At that price we have right now, it is at its lowest level since just about the start of February this year, and it's a very prime time to pick up perhaps one of the main blue chip stocks on the main index also. So if people are looking at a long-term play for Ayala Land, this might be a good time to actually enter. It probably won't get any cheaper than that as it starts to rebound also, and probably has a little bit of upside when the markets open later on. Sean?
All right, well, I'm still down there in the dirty, dirty mines of Semirara.
Hey, that's my job.
I know. I'm taking it just for today because, I have no voice. So anyway, Semirara, as we know, they are rehabilitating their Panian pit, right? And this will call for more jobs. They actually announced about 930 jobs open now because actually the way they're rehabbing this Panian pit is they're opening the Molave mine. They have the Nara mine operations, and as well as this rehab. They need shovel operators, safety marshals, and a gamut of engineers that come with operational expansion with the mines, with maintenance and whatnot. So that's 930 jobs. And checking out how Semirara is doing today, it's actually in the green, almost 1% up at the lunch break, trading at 131 pesos. Pretty flat today. Small spike to 131. But not doing bad on the whole.
Yeah, I mean, the other thing too about Semirara, Sean, is yes, it's only up by about 1%, but they've been pretty much on a tear for the last couple of days and couple of sessions. In fact, it's one of the reasons why DMCI has seen better days than a lot of their own holding firms. Also, given the fact that the net income in Semirara has been picking up, you know, the argument for expansion and hiring more workers might actually have some credence to it, and they will have the firepower at least to sustain this expansion if net income trends continue for them.
Definitely, and remember, they did lay off a lot of workers, so maybe a lot of these workers can be rehired, or they just have to recalibrate their labor force.
That is correct. It is from
Yeah.
the DMCI mining group, and then coming to Semirara, there is a possible shift over there too. But generally, I mean, it's Semirara doesn't. I mean, the deeper you dig, it seems the more upside they seem to be finding, especially with high coal prices right now. Eh?
Exactly, and you know what? We'll be taking anything we can that is good news today. Meanwhile, JP, it is 1:30. Time to revisit our top stories. The peso hit 50 to $1 today for the first time in 8 years amid a sell-off in Asian currencies. That was driven by the U.S. Fed minutes, making a stronger case for a December hike, driving demand for the U.S. dollar. This further dampened the mood in equities markets as fund withdrawals persisted. And fresh from the APEC summit in Peru, President Duterte says he vows to open up the telco and energy sectors in the country. Duterte mentioned Ayala Corporation and Manny Pangilinan, saying it's nothing personal against them. He says that the government has begun looking into the regulatory hurdles currently stopping foreigners from owning over 40% of ventures in such industries. And Governor Amando Titanco warns against the risks of a retreat from multilateralism. He maintains that the country is well positioned to deal with immediate global risks, such as the Brexit and the impending rate hike in the U.S. But he flags the protectionist sentiment prevailing in the U.S. and other countries, posing a major threat to economies. Let's now check back in with JP for early afternoon movements at the PSE. JP, some good news again?
A pretty tepid mood in the market right now, Sean. It's still up by about 7 points, but it's a very, very measly gain for them. Recall that we did start over here at just under 6,840, and right now at 6,843. It's not much of a pickup for the PSE, but early days, of course, as a lot of this I guess perhaps a lot of skepticism and nerves on the back of the Fed hike minute, the Fed meeting minutes of the meeting being released, as well as the peso's recent depreciation that you mentioned. Of course, we do want to take a look at the property sector, and there's a little bit of good news actually in this place. And given that the property sector is up by a measly 18 points itself, if I can just zoom in to show you guys how it's moving after the lunch break, though, property stocks are still relatively flat. Mega World over here, a little shy right now, not showing its colors at the moment. Mega World and Ayala Lands continuing to be up, but generally still pretty tepid after the break. Perhaps they're not done with their lunch yet, Sean. But so far, property stocks doing pretty well and a lot better than that we've seen over the last few days.
All right, speaking of properties, let's talk about Century Properties. Again, grabbing headlines this time with Mitsubishi. How is that affecting CPG stocks right about now?
Well, there's only one way to find out. Let's take a look at how the stock itself is doing. And again, like a lot of the property sector, property off shares right now, they are not. They're pretty much staying put after recording a 3 centavo gain. It's pretty good given the fact that it's also up by about it's just priced at about 55 centavos. As we know, the deal here, the story here is that they are slated to build about 4,000 housing units along with Mitsubishi Corporation down in Cavite. And again, this also, I mean, just when you think that the only real juice that Century Properties has to go on is the fact that the president CEO is about to be was announced as our special envoy to the U.S. and given his links with the president-elect Donald Trump in the United States, there is this one property that's showing a little bit of health for them. Whether or not pickup and demand for it is there is another story. But so far, at least we're seeing Century Property a little bit more muscle than we actually give them credit for.
All right, JP, well, I just can't stop asking you this question. You just can't get away from it. It's really bothering me. Peso weakness.
You're traveling soon, aren't you?
Right? It seems that the electronics sector is also changing its tune. What details do we have over
All right,
this?
so let me just pull up this chart on semiconductors. So as we know, the other day we heard Dan Lechigo of SAP actually talk about how a lot of investors in electronics are shying away on the back of this political uncertainty. But now with the peso actually hitting 50 to the dollar, he is saying that there could be windfall profits, in fact, for the electronics sector, especially electronics exporters. Although materials and labor could actually go up in cost, this could be offset by lower prices if the peso continues to weaken. So we could be seeing actually a very, very good pickup in not just our export numbers, given electronics is our biggest export and probably your most valuable export at the moment. It also could provide windfall for some of our semiconductor manufacturers. However, they don't seem to have gotten the memo yet from Mr. Lechiga. Phoenix Semiconductor, IMI, both staying quite flat throughout the day. In fact, not a lot of activity behind Phoenix Semiconductor, and even Certec, which has slipped by half a step down to about 23 pesos 40 centavos. However, this could be a long-term play, and perhaps could also, if the peso stays at these levels, at least the electronics sector could be benefiting from that. So it's not all doom and gloom with the peso's recent decline, Sean.
All right, thank you very much for that, JP. Now we're going to go on a short break, but when we return, the U.S. Fed minutes driving a sell-off in currencies. We'll have the latest from the region live from Hong Kong. Welcome back. You're still watching In the Loop on Bloomberg TV Philippines. Now, the peso may have just breached the 50 to a dollar mark for the first time since 2008, but the country's economic managers say there's no need to panic. Budget Secretary Ben Diokno says a weaker peso could even be a good thing for the government, and the Philippine economy has withstood worse than 50.
Yung slight depreciation, that's favorable to us, actually. Even to the government. It's favorable in general to, let's say, OFWs, exporters, but it is also favorable to us. We tend to collect more, and there will be a slight increase yung foreign debt servicing. But on a net, for every 1 peso depreciation, we have a gain of 7.2 billion ang government. Kasi we collect more. We've seen 55. It doesn't, as long as it's market determined, kasi talagang the money is going back to the US. Ganun. So yung mga nag-invest sa stock market, I think they're trying to exit na. So now this is the best time to enter naman. If you're an investor, pasok ka naman ngayon. Kita ka pa.
The peso has lost almost 6% year to date. Bangko Sentral Deputy Governor Diwa Ginigundo says that the local currency, like others across the region, is under pressure because of uncontrollable external factors like the impending U.S. rate hike. But he points out that portfolio investment inflows to the Philippines still came in at a net $1.4 billion in November, highlighting strong economic fundamentals.
You have a paradox of very sound macroeconomic fundamentals in the Philippines associated with negative market sentiment, and you end up with a weakening peso.
Asian currencies tumble as the U.S. dollar continues its rally. Let's see how markets in the region are reacting to this. Let's bring in Rashad Salamat live from Hong Kong. Hi, Rish. How's it looking across Asia today?
Hey, Sean, I mean, as you've been talking about it, this is, of course, the foreign exchange. They're front and center at the moment. We've got the dollar hitting highs not seen in 13 years. So you're talking about the peso weakening. It's really a dollar story. It's the dollar strengthening here. Now, when it comes to equities, it's a down day if you take a look across the board. But if you take Japan out of the equation only, is it really at the moment a down day? Because we have some strong gains at the moment taking place with the Nikkei. Bit of catch up there as they return from their Thanksgiving holiday. Dollar yen also helping things again. Dollar strength, it's at the moment trading on the 112.7 level at the moment. But we could also, when it comes to equities, see some money being taken off the table in the rest of the Asia Pacific after 2 days of gains. All of this after a third day of record highs for the Dow and indeed the S&P. But it is that dollar strength that is dominating, and so much for giving the yuan a floor. The PBOC setting the yuan fixing weaker again, 6.908. Now, the thing is, it has weakened since then, and some are saying that, well, that exchange rate could have a 7 in front of it by year's end. Looking also elsewhere, we've got the rupiah, the ringgit, and of course the peso taking an absolute pummeling here. Just taking the latest price, we got in on 49 peso 96. Now, we had breached that 50 level. The rupee is close to a record low too. All of this prompting emerging market central banks to consider stepping up intervention, doing so to protect their currency instead of cutting rates, which would actually help their respective economies by stoking off growth. Malaysia being a prime example for one thing. They kept rates unchanged in the session yesterday, and as a result, we do see the ringgit under slightly less pressure than some of these other currencies that are in the mix. A few data points. Singapore's third quarter GDP shrank less than what the government thought it would do, falling an annualized 2% quarter on quarter. It had been projecting a 4.1% decline last month. The city-state is still downgrading its growth forecast as the export picture remains weak. They are saying, though, that the economy is not in crisis, and they are hoping that actually Singapore does avoid a recession at the end of the day. So that's what we've got at the moment. Commodities-wise, we're seeing a surge in copper and iron ore, but it is gold taking a hit. Inverse relationship with the dollar as well. You started with the dollar, let's end with it. We've got gold down $26. 1,186 bucks buys you an ounce, all because of dollar strength. Sean.
All right, being quite the volatile November. Thank you very much for that, Rish. Actually, earlier today, the peso did hit 50 to a greenback, as I've been saying, and it has been bothering me as the dollar surged on the back of those Fed minutes. Joining us now is COL Financial's April Lee Tan. April, markets have been seesawing. You're still smiling. That's good. Do you see this 50 to a dollar happening this soon?
Actually, it's not surprising. What's happening is, of course, I think it's an emerging market trend. It's not only the peso, it's all other currencies as funds are flowing back to the U.S., as earlier discussed. So, and of course, people are, have highlighted how our current account surplus has been diminishing because of increasing imports and all of that. So, in some ways, the weaker peso is not surprising. Plus, of course, the more protectionist policies of the...
But if you add that, April, that weaker peso with our valuations, which still remain steep even amidst this massive sell-off, how does that then come together? Do you still think we're a good buy? Because BPI CIO Smith Chua earlier released a note saying that this is what makes us vulnerable, the fact that the peso has depreciated and yet we're still kind of expensive.
Yeah, actually, the thing is, historically, if you look at the performance of the stock market and the peso, there's an inverse relationship. If the peso weakens, well, it's not inverse in that respect. If the peso weakens, the stock market also weakens. But I would think that it's more of because of fund flows. We're very dependent on fund flows. Like, I think 50 to 60% of value turnover on a daily basis is foreign investor driven. So if they flow out, then the peso weakens, then the market also weakens. But, fundamentally speaking, I mean, in the past, a weaker, I remember during the Asian financial crisis, a weaker peso is really bad for the economy because we are dependent on US dollar debts. But right now, the opposite is true. A weaker peso is actually beneficial, except that, people like you and me, we like to go shopping and going out of the country. It's very expensive. But right now, the OFWs will benefit, the exporters, and the BPOs. the wage differential is already significant as is, but it makes it even more significant, make it an even more compelling argument for the BPOs to stay in the country. So, I mean, other countries are weakening their currencies to become more competitive, and we're
just,
very
it's
sad.
happening to us for free.
Yeah. So, yeah.
April, this is JP down here from the newsroom. I do have a question about the broader markets, and pretty much I've given up trying to call a bottom for the markets. In fact, everybody who's been on the show, on the broadcast, I've pretty much asked them to make their own calls. What's your take on whether or not the PSE has room to fall, and how much further might it actually fall? Could you call a new bottom for us before the PSE actually rebounds?
Well, technically, I just spoke to Juanes Barredo, our chief market technician, and he said that he's seeing support at the current levels. In fact, one clue is, you can see other regional markets rebounding. So, I mean, potentially, we could also rebound at these levels. So, hopefully, we'll rebound. But after that, I guess the question is, is the fund flow out of emerging market going to the U.S. already over? But fundamentally, I think valuations are starting to look interesting. Admittedly, we're not yet that cheap, but I think there are some sectors which are starting to look interesting. So,
yes, our other favorite word, sale. It's kind of a sale season right now, pre-Christmas.
Yeah, it's starting, yeah.
It's starting.
Yeah.
So it's a good time to buy. And that leads me to my next question. We're all scared of this potential protectionist policy, not just coming out from the U.S., but also from here, within our own shores, right? So this Fed hike, it looks like it's a done deal. We are poised, of course, to see another EM or emerging markets route. That said, which sectors would you advise people to put their money in, or do you just want them to cash out? Would you say that?
Yeah, actually, that's a very interesting question in the sense that, given the protectionist policies, you would think that the sector that would be most hit is the property sector. So, I mean, at this point in time, I'd say avoid properties. But looking at the valuations of properties, our analysts have derated the stock, assigned lower valuations, and have told investors to buy it at a much lower level. But still, I mean, the upsides are there. I mean, earlier on, you were talking about Ayala Land
and Mega World too.
Yeah, how low the prices are. So, we believe that if you have a long-term perspective, now is actually a good time to buy. It's just that, manage your risk. When you buy today, don't expect to make a lot of money in the short term. But if you, say, have a 5-year
to 10-year
view,
plan,
today is actually a good time to buy because we believe that all the bad news is already priced in.
Now, April, final question for me. Just to pique my curiosity, in fact, or whatnot, the telco industry itself, I haven't met a lot of analysts who have been very, very high on this in this particular sector. We've seen Globe and PLDT suffer a lot recently. And with Duterte seeming gung-ho again on perhaps bringing in a foreign telco player, could this add more headwinds to the two stalwarts in our telco sector?
Yeah, I mean, admittedly, there really is more uncertainty because, of course, you could see more competitors actually coming in. But at the same time, I mean, think about Globe and PLDT. What percentage have they been down from their peaks? I think more than 50%.
More than 50%,
so, in some ways, that's a bear market valuation. I remember I was doing a study on bear markets, and peak to trough of the Asian financial crisis is around 80%. So again, if you have a long-term perspective, I think valuations are there. We're not gonna, these telcos are not gonna fold shop, and in fact, their data business is growing. It will just take time for data to take over the SMS phone calls. As far as more competition from foreign players are concerned, I mean, one lesson that we've learned from Telstra pulling out is, it's easier said than done. These new players coming in know that it's not gonna be an easy fight coming in because we have these dominant players that have established distribution infrastructure. You can't just convince people to pull out. It's gonna be tough unless the government provides a lot of incentives. I don't think they will be grabbing the opportunity to jump in the market.
It's quite expensive too. Yes, and thank you. So bottom line, it's a good time to buy in if you're in it for the long haul.
Yes.
If you're short-termer, and not so great.
Yeah, I mean, the volatility's there. I think you know, I mean, remember 07, 08, we actually weren't affected by the global financial crisis, but the market fell by 50-something%. So it's similar to that, but it took like only a year and a half for the markets to recover. Because, you know, the numbers at the end of the day still remained strong. So again, maybe people are waiting for the numbers to continue proving that even with the new administration or weaker ties with the U.S., protectionist policies of President Trump, we're still going to be okay. And if they see that, then we believe that the foreign investors are going to come in and, you know, buy this market.
Always very calming effect on me. Thank you very much, April Lee Tan from COL Financial. When we return, Senator Leila de Lima's former aide and alleged bagman Ronnie Dayan finally testified before the House panel. We'll have the latest from Congress after this. After months of hiding, Senator Leila de Lima's former aide Ronnie Dayan finally testified in Congress, and he revealed that the senator asked him to skip the House investigations. Shyla Francisco is in Batasan to monitor the hearing. Shyla, what other big revelations did we get from Dayan today?
The House Committee on Justice into the alleged believed drug trade is now ongoing, with lawmakers questioning Senator Leila de Lima's former aide and driver Ronnie Dayan. Reading his affidavit, Dayan affirmed what he said in his press con in Tamkrami last Tuesday, that he received drug money for de Lima. He again admitted his 7-year relationship with his 57-year-old senator. He also revealed that he received money from Kerwin Espinosa 5 times for the former Justice Secretary. But Dayan clarified he thought Espinosa was an engineer and not a drug lord. Dayan also said he was willing to attend the House hearings last September and October, but de Lima convinced him to hide instead despite the issuance of a subpoena. In an exchange with her daughter Hannah May via text, Dayan said that de Lima advised that he should not attend since it would be embarrassing. After the affidavit, Vice Chair of the House Committee on Justice Rodolfo Fariñas asked Dayan's daughter to attend the hearing to be asked about the details of the text message. Based on the text message, de Lima said that attending the hearing is part of the plot of House Speaker Alvarez and President Duterte. The daughter then asked would Ronnie Dayan be caught if he fails to heed to the subpoena, to which de Lima replied, "Isn't he hiding?" It was also confirmed that the number used is the same number de Lima is currently using. According to Fariñas, they will study what to do with de Lima after confirming she prevented Dayan from responding to the subpoena. But Congressman Harry Roque is asking the Senate to have de Lima removed from the House if she will not resign, so as to protect the integrity of the Congress. Meanwhile, Congressman Garvin noted inconsistencies with Dayan and Kerwin's testimony, but Dayan insisted it is him who is telling the truth. He also affirmed that out of the 6 witnesses in the House Committee of Justice hearing that points to Dayan as the one who collected money for de Lima, Dayan said that he only knew one, and that is Director Ragos. Sean, lawmakers are still trying to get more details on the relationship of Dayan with de Lima. They're also trying to piece together the statements of Kerwin Espinosa yesterday and Ronnie Dayan today, and we'll give you more updates on that later. Sean?
All right, thank you very much. Looking forward to that, Shyla. Meanwhile, the Asian Development Bank, or ADB, upgraded its growth outlook on the Philippines. From 6.4%, ADB now expects full-year growth to hit 6.8% after the better-than-expected third-quarter figures. The bank cites a drastic improvement in exports on the back of a weaker peso. The momentum will likely continue, as the bank is also planning to revise upwards the 6.4% forecast for next year.
In the next year, the growth at about 6 to 7% is more than achievable, in our opinion. And this is supported by really strong domestic consumption and investment. And with the plan of the government to put up more infrastructure investment next year, and we expect the government to run the budget fiscal deficit next year, although it's still very healthy.
German and Japanese companies are taking a wait-and-see stance on President Duterte's economic policies. In a forum hosted by SAPI, German Embassy Commercial Counselor Andre Bull said that the business community is watching how fast Duterte will implement his 10-point economic agenda. Meanwhile, Japanese Embassy Trade Officer Junichiro Suzuki said the deal signed during the president's trip to Tokyo will help improve the country's infrastructure. Transportation Undersecretary Noel Quintanar is stepping down on November 29 to wipe out doubts of impartiality in the agency. Some groups have lambasted Quintanar's appointment last June due to a possible conflict of interest. Prior to his government stint, Quintanar was a senior official at Ayala Corporation and its infra arm. Ayala is part of the consortium that operates LRT Line 1, and it also bagged some PPP deals. When In the Loop returns, we'll revisit the local market 30 minutes into the afternoon session. Stay tuned. All right, you're back in the loop, and it's almost half an hour into the afternoon session. Quintin usually asks you about this, JP, and he usually asks you about stocks. And though we do want that update from you, that looming Fed hike really weighing in not only currencies today, not only stocks today, but also bonds.
Okay, let's go straight into the bonds then, Sean. I mean, as we know, the peso has hit about 50 to the greenback. It's staying at that level, even as the U.S. is on the Thanksgiving holiday. So this dollar strength really surprising, given they've pretty much unleashed the turkey on the rest of the emerging market currencies. But you're seeing that U.S. yields and yields are going up, as well as German 10 years and Japan 10-year yields. Now remember, Japan set a negative policy rate, but given the rise in those yields, they're already up to about 0.03%. Very, very strong rise in yields. In fact, that was one of the few concerns that the Fed mentioned in their minutes, saying that in the near term, we could see these yields spike considerably. Now, if we look at how these other funds, let me just pull up this other chart for you guys. 10 years at least for the Philippines has also started to rise. They are at about 4.857%. In fact, what ING and UBS forecast is that these 10-year yields could actually hit the 4% or pared back to 4% by the year end. We could be seeing a rise in these particular yields. And we have to remember also that there is that plan to raise up to $2 billion in global bonds after the Fed raises its rates in December. This is to fund some of the government's near-term spending also. But when you look at just how expensive it's been already for a lot of these for 10-year yields in U.S. denominations, it's already rising to about 3.4%. So the concerns of Security Bank with regards to the timing of this bond issuance that the Treasury is aiming for or is targeting, there's credence behind the dubious regard that a lot of people in the markets have for this move, Sean.
All right, JB, however, bond yields are still seen to be rising by the year end, right?
Yes, that is true. I mean, that's what they're thinking here also. I mean, the idea is also that if the Fed also steepens the number of rate hikes that they have, as we heard also from MUFJ earlier on when Teta talked to them also, we could be seeing that also start to creep up. It's not the end of the march upward for bonds. It could be to the detriment of a lot of emerging markets, and also the peso at that, going back to that as well, and any sort of borrowing we might do globally or locally also, Sean.
All right, JP. Well, BPI, again, not the only one worry of local equities. Credit Suisse is also weighing in. Well, of course, April just gave us her piece, and she's a little bit more calm. What did Credit Suisse say?
All right, so Credit Suisse is saying that there could be an opportunity, perhaps, and they're being a little bit more diplomatic about this. There could be an opportunity, given the downturn, to actually come back in. And one of the indicators that they've actually identified here is that when you look look at 12-month rolling inflows or outflows for the PSE, it is starting to turn negative already. And if that happens, we could see that as a contrarian indicator that it perhaps now is a good time for foreign stocks to come back and perhaps provide a boost. What's very telling is that despite the larger amount of outflows we're seeing from Thailand and Indonesia, over the last 12 months, we're still seeing net inflows of more than $1.5 billion in foreign funds in Indonesia and close to $1.5 billion in Thailand. Compare that to the Philippines, which is just under $250 million, and you can see how minuscule that actually is. So actually, these foreign fund outflows that we're seeing from the Philippines, although smaller than some of our neighbors, is actually could actually have more of an impact. In fact, Saktish Siva of Credit Suisse saying that one of the things they're really looking for is better valuations for them to reverse their rating on Philippine equities. Right now, they have us at underweight. They could upgrade it if these valuations actually get better. But that is a much a taller mountain to climb and easier said than done, Sean.
All right, well, JP, my turn. I have something for you. You and your infra stocks. This just in over the wires. Metro Pacific.
Some good news, Sean.
Yeah, Metro Pacific Investments and the government already signed the construction of the NLEX Road Connector deal. Now, this 23.2 billion peso project will be connecting North Luzon and South Luzon expressways. The agreement is for the construction, operation of the 8-kilometer elevated toll expressway over right-of-way of Philippine National Railways. It will be funded by Manila North Tollways, a unit of Metro Pacific, through debt as well as internal funds. And that's it for us today, Thursday, the 24th of November, 2016. I'm Shawn Yao.
And I'm JP Young. Thanks for watching.